It's moving. Yeah, it's really peaceful, like for teaching or something. And oh, I'm sorry. There's some more video effects. You can look like a cat or a reindeer if you wish. So I found those yesterday. So there's a lot for you to look at, Rob.
Yes, thank you.
I mean,
I'll
so
be
glad
looking
to
at
see that you're enjoying the conference.
Well, I will keep admitting anyone else who dribbles in. But in the meantime, really want to welcome everybody. Thank you so much for joining our workshop today on a lot of the challenges that people are facing in interacting with the UI system have been touched on, or more than touched on really, by panelists both today and yesterday. We hope that this workshop will put some numbers and trends to those problems to help us better get a handle on the scope and the scale, and start digging into policy options for addressing them. So before I hand it over to Rob, just a couple of quick notes. First of all, we are recording this. So if you do feel like your photo or your background better represents you, or for any other reason, feel free to do that. But as I said, we do love to see actual faces and feel like we're interacting with people. My name is Elaine Weiss, as indicated by my little name tag and my green t-shirt. I am staff at the National Academy. I'm the policy director. I am delighted to be joining Rob Pavosevich today on this workshop to go through the challenges to UI. During the discussion today, just like during the discussion throughout, feel free to use the chat box to talk to each other or pose questions to Rob, me, or both of us. When we get to Q&A, you can raise your hand. I actually have a handy dandy little way to unraise your hand after we talk to you. So that's very cool that I've just discovered. And with that, I think I will go ahead and turn it over to Rob.
Thank you very much, Elaine. I appreciate that. Welcome, everybody. It's nice to see that you could join us today. I am going to be talking about the collapse of the unemployment insurance system. And if you are just coming to unemployment insurance, perhaps in the last year, you've been paying more attention to the program, you might be wondering or thinking that this session could be about a diminishing amount of resources provided to states for administration or operations of their programs, or possibly an increase in the amount of fraud that's going on, or a lack of reserves that states have. But actually, I'm going to concentrate during my portion on one issue that I think is the most important issue facing the unemployment insurance program. And that is the complete deterioration of unemployment insurance payment of benefits to claimants. And I say that because really at its core, the program was structured to really revolve around doing that one thing. And if you look at really the goal, the mission, and the purpose of the program, it really started out to provide a sort of a temporary partial wage replacement to people, to replace sort of the severance programs that were haphazardly in existence. And really, through that payment of benefits, provide an automatic stabilizer for the economy. But really, the first and foremost and most important function of the program is provide a partial wage replacement level. And when I found this definition, you can find it anywhere in advisory commissions and state laws. And usually it's pointed out that that's kind of a relative definition. What exactly do you mean by partial wage replacement? Well, fortunately, there's a well-established, identified, and endorsed sort of standard for the payment of benefits in the US. And the standard, which was never put into federal law, but has been used and endorsed by many administrations, by advisory councils, commissions, has been expanded slightly, but from its origin, it states that for eligible workers, each state should replace at least 50% of a person's past wages. That was the beginning recommendation that originated shortly after the program was adopted in 1935. And then it was expanded by commissions afterwards to say that that should 50% replacement should take place over a 6-month period, and further expanded to by the Advisory Council of Unemployment Compensation in the 1990s, which added that a recommendation should include that the maximum weekly benefit should be 2/3 of the state's average annual wage in the past year. And so we now have a complete sort of standard for what states should be meeting. And it's a really helpful level. It's actually kind of low compared to a number of other countries, but I think given the US economy that it's a reasonable sort of level that we should be looking at to compare states. And I retired from my job in 2019, and I've spent some time looking at this issue. I even created a report that looks at individual state efforts at benefit payment. And you can find that graciously published by the National Academy. And you can find that online. And it's a yearly report, but it provides a statistical analysis of each state's sort of status and level of benefits being paid. And when I was creating this report, I really discovered a few things. And one of them is this deterioration that's taken place in the payment of benefits. And the report actually provides about 15 statistical measures. But to tell the story of what's going on in terms of this deterioration, I decided not to use any one of those measures and just rely on one simple statistic that I created that I think provides the best look at telling the story. And I just took the total benefits paid out by a state during the year and divided it by the unemployed people, the average CPS monthly number of unemployed in the state. And when you do that over time, it really just jumps out at you what's going on. I think this measure can be used sort of like a proxy in terms of for those states that are having a decreased proportion of people claiming UI and are having a lower sort of replacement rates. This measure sort of captures both of those dynamics. And for those that states that are increasing the level of benefits and proportion of people, you're going to see an increase in this level. And so when we look at this picture, it sort of just speaks for itself what's going on. I averaged the bottom 5 states, and you can see that. Well, first of all, if you look at this measure during the 70s and 80s, you can see that the US by state was had a narrow band. The amount of money that was being paid out compared to the unemployed people didn't vary that much between states. And then starting in the 90s, it started to grow even more. And it grows after recessions. And then we hit 2009, which is the big chasm that takes place, leaving us with what we have today, where a group of states, it's clear, have decided that they're going to approach the method of financing unemployment insurance by cutting benefits. And you can see that quite starkly by looking at the bottom line. The red line represents the average of this measure for the bottom 5 states. And after the recession, they just started to drop dramatically. And even the average, which is the middle line, the gray line in the middle for the US, is just now starting to approach levels that it had in 2006, and is just about paying on average about what it did the previous year, but there are a number of states below that. And so, and you see the green line represents another group of states which actually are doing quite well in terms of meeting payments to the number of unemployed, which means that the proportion of unemployed are not really dropping, that are receiving UI are not really dropping in those states, and their replacement rate has not been dropping. And so they're on a path to continue the level of payments per unemployed person that they had in the past. But, you know, how is this taking place? I just want to describe a little bit what's going on. So for those bottom states, what's happening is that the state legislatures are actually taking no action, because their maximum weekly benefit is set in law at a certain value, and unless the legislature decides to do something about it, it's not going to change. And so you see the maximum weekly benefit amount in a state, which is the maximum amount that a claimant can receive. For the bottom states, which is between $200 and $300, has been staying the same for over 10 years. And so the states in red all have been keeping constant their maximum weekly benefit, while the states that are into the $500, $600 level all have what are termed indexed maximum weekly benefits. The maximum weekly benefit goes up every year as the wages change in the state. And so by not doing anything, they're really holding benefits and decreasing the amount of money that the state provides as claimants come in with higher wages. And a second method that states are using is just going outright and cutting the level of potential duration that claimants can receive. So since the last recession, we've had 9 states that have actually gone in and reduced from 26 weeks down to a level as low as 12 and 13. And those that's the maximum duration, potential duration that a claimant can receive. And that makes a big difference in terms of the amount of money that's paid out in a state. And so the combination of those two sort of dynamics that states pay benefits on has led to just a complete breakdown in terms of the replacement rate. This graph shows the proportion of wages that are replaced by benefits. And you can see that this is the recommended level of 50% is highlighted there. And there are 38 states that, and this is in 2019, that were below the 50%. Not only do we have 38 states, but if I was to bring this graph up for 10 years ago or even 20 years ago, what you'd see is a much narrower band between the higher and lower states, and you'd see a higher number of states approaching the 50% or above the 50% level. And so we seem to be getting worse over time. And why is this happening? And I think it's an intentional response to the methodology or the structure of the program. You may be familiar that the unemployment insurance program is a state-funded program. States are responsible for providing all of the benefits. They tax employers and put that money in a reserve account, and they receive no transfers from any other state. So we're one of the only countries that didn't develop a countrywide program. States are on their own, and when they run out of funds, they borrow from the federal government and are liable to repay that money at interest. And it's very common for following recessions to be a number of states to be to be borrowing from the federal government. Actually, in 2009, we had 35 states borrow a peak amount of $50 billion, just about. And now what is really surprising is when we look at the status of state reserves following following this year, 2020, and I took the reserve status in January of this year. And what we see is really surprising, is that not only are states they've borrowed $46 billion, they're in debt, and now actually, if you were to look at levels, we're now over $50 billion here in March of state borrowing. But what's surprising is the states that are borrowing. And so you can see that we have a number of surprises. One of the biggest surprises, Hawaii, that has never really been a borrowing state, but I think they were really hit hard by the pandemic, and they are now up above $600 million. And for them, that's just an enormous amount that they are going to take years to repay, probably more than 10 years to repay that, I would predict. And then following that, we have a number of states which are the largest in the country. And what's surprising about this list is that none of the states that are big benefit cutters, the ones that were at the bottom of the list in terms of benefit payments, are on this list. So even though in the past we've had Michigan, we had North Carolina, South Carolina as borrowing states, now those states are actually, if you look at their trust fund reserves, they're actually doing quite well. So we have a really bizarre circumstance where North Carolina has about $2 billion in state reserves, and they're paying very little out in benefits. And they seem to have taken a strategy where they want to protect their trust fund. And it's the same in Florida. They have over $600 million in reserve, and they're paying out very little in benefits. While these states here are all faced with an enormous level of debt, they're going to have to raise taxes to repay it by the federal statutes, which are going to force them to raise taxes. And the other states, the ones that are paying very little in benefits, are not going to be paying higher taxes. And so it's not going to take long for other states to realize that this is an important strategy. And so unless something is done, it's a pretty easy prediction that a number of other states are going to cut benefits to replicate what's going on in the states that are now have high trust funds and low benefits and don't have to raise taxes. And that's really going to cause a further collapsing of the unemployment insurance program, and why I think it's probably the most important issue facing the program. Not to diminish the other important ones that have really arose seriously during this year, but unless something is done about this structure, I really think it's going to get worse and worse. Elaine, I'm going to toss it back to you now to see what we can do about it.
Sounds good. Thank you so much, Rob. So thank you on a number of fronts. Thank you, first of all, for really great, unique data that provides us with a real in-depth perspective on all the various ways that the UI system is not working as it's supposed to, for great participation on our UI task force, and of course, for hosting this workshop today. As Rob's presentation illustrates, literally graphically, the UI system is failing to fulfill both of its intended objectives, and they're both important. Supporting individual workers and their families when they're between jobs, but also providing a cushion or a counter to the economy as a whole during a downturn. And I want to make a couple of points about that. First of all, one that's come up repeatedly today, kind of in all of our panels, those failures are the most acute and the most pressing for workers and communities that are in especially precarious situations, workers of color, single women, immigrants, older workers. As Rob illustrated, this is also putting financial pressure on states just when they can least afford that pressure, creating a societal burden on top of the ones that we are all facing as a society. And as our panels today also illustrated starkly, our country's culture of punishing people who are born into or fall into difficult circumstances through no fault of their own has played a major role in shaping the dysfunctionality of this system. And so addressing culture, I think, is part of all of our jobs in addressing the problems that Rob just described. Just really briefly to summarize, multiple components of the UI system are interacting with each other to drive these problems. So building up a better system or building back better, to paraphrase a certain new administration, that will fulfill its goals in an equitable manner is going to require both addressing each of these distinct issues, but also viewing them holistically and understanding how they interact with each other. And just to name several of the most important ones, inadequate benefit levels that are unbelievably disparate across states, insufficient benefit durations, and I don't think Rob even mentioned this, is especially a problem given that jobless spells are continuing to get longer. So just at a time when people are no longer in short jobless spells, and not only during recessions, but between recessions, during good economic times, we still have these very short duration spells that some states have cut even lower. And again, disparities there. Outdated technology that isn't supported and doesn't serve customers well. And I should say, I experienced this personally. Before this job with the Academy, between my last two jobs, I was getting unemployment insurance through DC, and I could not access the system and couldn't figure out why. And on my fourth try, when I finally got a live human being, she explained to me that the only browser that worked with their system was such an old one that I had to go back and install an old, not used browser on my computer in order to access and be able to input my information. And that's why I couldn't get it. It was insane. I never heard of anything like this. I didn't know anyone who used this browser anymore. And then to go with that, lack of support staff to help with applications, questions, appeals, job searches, and of course, eligibility requirements, as has also come up multiple times today, that really don't reflect shifts in the labor force in recent decades away from traditional full-time employment. So a growing share of people who aren't eligible for UI anymore, but who are jobless through no fault of their own. But that definition of unemployment no longer matches how and when people are jobless today. And of course, as Rob said, very low levels for UI taxes, which leads to inadequate resources across the board. And of course, a problem of not being able to build up reserves. The good news is that the Academy has recognized this unique moment that we're in, and that we really cannot afford to try small incremental piecemeal approaches to fixing the system anymore. We all see that we're in a moment, both in terms of understanding that social insurance is elevated, and we have a chance to build on that, and also that UI has finally become a front page issue, and that we have a chance to tackle it. So we've put together a task force to look at comprehensive ways to reform, including, looking at all of the components I just talked about. Rob is a member of that task force. Yay, Rob. We're going to start by mapping out, we'll be spending the next few months mapping out in detail and describing all of these problems, their scope, their scale, their breadth and depth, and including how they relate to one another. And then we will be working within 3 working groups of the task force to address these issues. One of those working groups will deal specifically with issues of benefits, eligibility, and reemployment services. A second one will deal only with financing, because that is its own tough nut, and we need a whole working group just to deal with that. And then a third of them, in keeping with a lot of what we've been talking about at this conference, will be focused on issues of administration and accessibility, equity issues, special programs, and also looking at statistics and research. Because one of the challenges that we all face here is we don't know enough. There's too little data out there. The data are difficult to access. There's differences state to state in how we access that data and all that, and that's something we need to tackle as well. As with prior Academy study panels and task forces that many of you, Catherine Edwards, I'm looking at you, are very familiar with, we will be exploring and assessing the viability of various options, not advancing any particular one, but I will say this one will be acknowledging and attacking upfront the impacts of systemic racism and, for that matter, gender discrimination on how we got us to this point. And in keeping with the Economic Security Study Panel, we will be looking at a broader, more diverse group of experts to guide the work as per our approach to policy issues at this conference. In fact, one of our 3 co-chairs for this group leads legal assistance in Philadelphia and works with folks daily who have challenged to access the system, who've been denied benefits unfairly, et cetera, who struggle with non-standard work and how they fit with this system. So we feel like her expertise will really bring a lot of real world critical experience to the work that we need to do. And this task force will be looking at options to comprehensively overhaul, or as I like to think, modernize UI through one of 2 pathways. One is retaining the current federal state hybrid, but with substantial boosts to the floor in various respects. And the other, of course, as many have alluded to and advocated, perhaps shifting to a federal model and incorporating needed reforms into that version. But whatever it is, we will be looking to understand the real life experiences of jobless workers and to ensure that we shape a UI system that works well for all of them. And with that, I really wanted to open the floor to questions and to a discussion. And I thought I would start by asking which of you have had personal interactions with the UI system? If so, were they during COVID? Were they before COVID? Which state was this? What was it like? And we can kind of take it from there. Or none of you have ever been without a job or interacted with
Can I talk?
Go for it.
Okay. I'm having a lot of trouble with the technical stuff.
Oh,
I'm a lawyer and a physician and a civil service retiree. What I'm hearing is you don't understand that the unemployment system is operating exactly the way it's supposed to. This is not a glitch. This is intentional. The people don't like unemployed. People think unemployed people are lazy. They don't like the unemployed system. We are the whole new package in Congress, in the Senate, is held up because Republicans refuse to allow any money to be given. They say blue states, the ones that don't have any money because they're giving it out in unemployment benefits, we shouldn't help them. We should only help red states, who are the ones, I didn't get to look at the graphic for very long, the red states who are the ones who are holding on to their own money and cutting benefits. The system is set up to do that. Unemployment benefits are not favored by half the country and their politicians. So unless and until we can somehow address the political problem, you can think of all kinds of clever solutions about access and this and that, and they'll find other barriers to access. The system is working exactly the way it's supposed to work. It's the way they want it to work. And they don't care about, get better access, more data, better solutions, an easier application process. They want to make it difficult. They want to deny as many people as possible.
I think there is, I think we can all see that there is a lot of truth to that. I will say one advantage, I think we've all seen some, small silver linings in COVID. And one of them is that what you've just described, certainly in some states, I think Florida is a I can say shining example, ironically, of that is an example that people are seeing that probably absent COVID we would not have seen, because the level of visibility of that crash and the intentional sabotage of that system probably never would have been illuminated. I think there's very little question about that. The article actually that I just posted from the New Republic describes exactly what you talked about as well. And so I think this task force is going into that issue with eyes open. And it's why I said that culture, I think, is such an important point. I think we heard it throughout the day today that there is a culture in the United States, a longstanding one, of treating people who are poor as at fault, treating poverty as almost like a disease that you brought on yourself.
That's right. Laziness, shiftlessness.
Right. And I want to say that there is a definitive racial undertone to some of that as well. There is no question that systemic racism feeds that and underlies quite a bit of that. And the attempt to portray, in particular, Black people who are low income as shiftless, lazy, not smart enough. And that's why, for sure, helps justify some of what really is a big disparity between what the public actually wants, what public opinion suggests, and how policymaking is made. That said, there is a big move toward wanting to do policy differently. Catherine, maybe you could speak to this a little.
Can I say one more thing?
Sure.
Sure.
As I say, I've had trouble connecting with the conference, but the focus on racism and discrimination and all that, yes, it's there. But when those are the only people you seem to be concerned about, not white poor people. What people hear is that all the Democrats care about is gender, is identity, Blacks, transsexuals, whatever. But they don't care about, quote unquote, us. No one listens to, only Trump listens to us. That's the rest of the people who are not Black, female, disabled. We have to talk about including everyone, including the majority of white people in the country. I know that's not what you meant, but if you think about the campaign, the primary campaign, Elizabeth
Okay,
Warren.
I think that we can't get into the primary campaign because right now we really do need to talk about UI. So I want to let Catherine talk a little since we have kind of gone past the primary campaign.
Yeah, for those of you who don't know the National Academy of Social Insurance very well, it's not a political organization. It's a research and policy organization. So we don't take a stand on politicians or campaigns. We're really here to provide evidence-based research on how to make the best policy that's the social insurance design. Not to, I think that the conversation that you want to have is really important, but we are design people. And that's why we are talking about these design elements. And speaking of design, Rob, I have a question for you, which is I've heard so much about how, I've heard from a lot of people that federalization is the only thing that makes sense. Given issues of equity across states, given the tax incentives of firms, it kind of leads you to the conclusion that a federalized program with a changed or augmented statutory incidence so that it also falls on workers, right? This is like 1 and 2 things that we need to have going forward. What I have not, have heard or read as much about is what do you do with the existing trust funds and the existing tax base? Because if you federalize a system, it's in effect a bailout of the 20 states that are currently out of money because you take that money off their hands and then states have money left. And so I haven't heard like a really cohesive or compelling policy of what to do with all this money. The states in the black, the states in the red, like if we transition to a federal program, these tax dollars have to go somewhere or not. But either way, to Caroline's point, someone will be mad about it. Because it is a lot of money. And so have you thought, like, for the task force in general, but then also your expertise, what do we do with these taxes?
Oh, yeah, that's a very good question, because it's a large leap going from our state structured system to a federal one. But there are we've actually confronted the same question many times in the past. The program was structured during the Depression, and really because of that political environment during the time, we've ended up with some of the sort of vestiges of that period that really do not fit today. And 1975 was really the first crisis, and we had a large commission which looked at ways to restructure unemployment insurance, and their main conclusion was that we shouldn't federalize, but we should develop a what's called a reinsurance program. And that is a way to sort of remove the differences in costs that each state has, and to provide greater pooling of trust funds in order to address this differences in costs that we face. And it's a step short of federalizing, putting all the trust funds into one pool. And I think it's actually has a lot of potential. There were a lot of programs, proposals made, and a lot of them were really, I think, would fit well even today, where you're stepping short of federalizing, but you're providing federal assistance to high cost states from a larger pool that states provide into. To answer your question though, you could develop a federal program that had a higher tax rate in the states that are borrowing money currently. And so that for a few years, depending upon the amount that you owe the federal government, you'd have to flat rate a federal tax, because we'd have to remove experience rating in a federal program. But you could assign a slightly higher tax to the states that have outstanding loans. And that's one way to address that.
Okay, so if y'all are bear with me, I have another tax question, which is, the PUA program, or PUA. I mean, I say PUA because that's how I read it, but I don't feel strongly about calling it PUA or PUA. I just want to make that clear. I don't want to fall down on either camp. So the PUA program has no basis for permanence, since no taxes are currently collected on them. So in order to incorporate PUA permanently into the UI system, there has to be a new avenue of tax collection, either that the worker pays kind of with their Social Security, or that the independent contracting agent pays. But I have this block in my mind of what this would look like on a state by state level. And I've kind of come to the conclusion that I don't know if you could really successfully incorporate PUA into separate state systems, given that so many contractors, right, like are across state lines, right? Like, is Uber going to pay into everybody's trust fund based on where their drivers are? Like, what if they drive to and from Illinois and Indiana when they're going from O'Hare to Gary? I just have in my head, like, I don't understand how the state structure is going to enable the incorporation of the independent contractors, and that truly the only way to get them in would be to federalize and change the tax incidence. That's the conclusion that I've come to, but I don't know if that's just because I'm not being creative about tax structures for independent contractors. And I would open this up for everybody, not just Rob, but that's kind of where I've landed with the tax structure conversation, is that states won't like it because it's going to bail out some states, but it's the only way to really get PUA and those workers in permanently. Rob, do you have thoughts on that?
Yeah, I do. I have several, unless anyone else has thought about it. And so we do actually have examples of employee taxes. So there are 3 states that do have employee taxes currently. And actually the rest of the world has employee taxes. And we're one of the few countries in the world that doesn't. And in these 3 states, Pennsylvania, New Jersey, and Alaska, it actually works quite well. The amount is paid by the employer, but taken out of the wages of the employee. And it's paid on the same wage base and a flat rate. And so whether you go to or leave the same program in place or go to a federal system, you could have an employee tax. But to cover independent contractors, self-employed, and the gig workers who have not established the attachment to the labor force requirements that state programs have, you would have to make that a voluntary tax. That's the only way I think that it's feasible, because you have to finance it on the state level, and you have to have a greater pool of people in order to finance, because the people who voluntarily pay will probably only be those people who have high probability of collecting. But still, you have a pool of funds from the employee tax that you can use to pay for those who are voluntarily paying into a benefit that they could receive at a time. And you could structure that in actuarially in a few different ways. It would probably have to be less money than is received by regular claimants. But that's the way I think we should go forward. I don't know if there's another. John, do you have an idea?
Yeah, I'm actually a tax law professor, and I'm happy to help in any way I can on this project. But it seems like we already have, withholding, Federal Insurance Contributions Act and Self-Employment Contributions Act is are the federal Social Security payroll tax mechanisms. And you could easily, at the federal level, create that kind of arrangement. And you could also have, we have withholding from employers on W-2s. We're not very good about 1099 withholding from Uber and Lyft and in that sector, but you would make payors, regardless of where your independent contractor lives and works, or your part-time worker lives and works, you would require withholding. There's really no such thing as a voluntary tax, Rob. It's
You're right. You're right.
to pay taxes.
But
I was like, oh, I can get down on that. That sounds good. For income taxes, I view them as voluntary, which is why I'll end up in prison. Yeah, so I feel like I'm lucky enough to have the expertise in the room that I just had to ask. I feel point blank, like, the tax structure to me for independent contractors seems to point only federal. And John, you're nodding because it doesn't. Okay, I can stop stammering. And I also took all the questions to start, so I can let other people talk now that I've got my tax.
Well, I meant that there would be two separate. So there would be an employee tax, which would be just like the employer tax now, a requirement that everyone, a public sector tax covering all employees. But in addition, right now, self-employed independent contractors do not pay unemployment insurance tax, even in the states that have employee taxes.
But let me say, it doesn't have to be a federal solution, and states could impose withholding even on independent contractors, but certainly on employees. So I was interested to learn about that. Thank you.
Yes. And so I'm just suggesting that in those states that have employee taxes, that's a potential financing method if you were to request that if you're covering independent contractors, because they can lay themselves off, self-employed, they have to be voluntarily contributing to this employee tax, is what I was referring to. I don't know. You're right. I probably shouldn't call it a tax then.
It's more like insurance. I mean, that's what it is.
Yes. Yes.
This is insurance against the risk I'm going to get unemployed, just like I'm going to save some for retirement for my old age.
Yes. And in working at the Department of Labor, it was actually quite fascinating. Every few years, we would get calls from private insurers that would want to develop unemployment insurance besides the public sector, the state program, on their own. And so we would see separate programs developed by private insurers, but by and large, they all failed. And it's because the only people that would sign up for it were people that were really going to be expecting a layoff. most people don't really consider signing up for unemployment insurance. They don't see the value of it. And it wasn't really privately viable program.
So I don't know if other folks have a question, but I had actually a question to pose to folks in the room. Presumably you're here because you have an interest in unemployment insurance and probably have either worked on it or worked with it. And I want to thank Don to start with. Thank you so much for offering to help us out on that front. We are assembling a stable of advisors with specific expertise. So duly noted, and expect that you may get a call or an email from us at some point. But I do want to ask other folks in this room, kind of both generally, if there is research, information, and I include qualitative research, other, other resources of that our task force should be looking at as we explore both the various challenges to the program and potential solutions. Definitely, let us know if you guys have thoughts, questions that we should be asking that maybe we haven't thought of yet. Anyone? Thoughts?
I will just chime in here that and it was mentioned, but I mean, the application process was archaic. They're using COBOL from the 1970s. And the infrastructure legislation that is likely to come through Congress or UI reform bill might simply say the feds are going to pay for you to upgrade all your administrative systems, and we're just going to take it out of general revenues, or we can we can raise the unemployment tax to pay for it. But this is the way in which we're going to improve the system and make it responsive. People have waited months, and independent contractors had to wait even longer because nobody had any existence or knowledge about them.
Yep.
So, just a thought.
I have some experience with that one too. My husband's an independent contractor, and it was fascinating, to put it mildly, to watch him trying to interact with the system in Maryland that was basically putting out, press releases every week, like, yep, we had a glitch last week, but we've totally fixed that glitch. And then my husband would be on the computer for 3 hours and he'd be like, yeah, that glitch is not fixed. I'm done with this. I'm getting on again tomorrow. Tina, I think you had a question or a thought.
Sure. I'm curious if anyone has anything, that they would share off the top of their head, and just also how this task force is looking at, trying to think how to phrase this somewhat concisely, that incentives that are created for people to stay in jobs. I think that that's something where there's interaction with the unemployment system, right? Like maybe the workplace is unsafe, but the burden of proving that is very difficult. Or folks who have childcare issues or other reasons where things get classified as a voluntary quit, and that's very difficult. Or, you were asking if we'd received unemployment before. I've certainly been unemployed, but haven't, partly due to reasons for quitting, but also moving between states. And I think the current experience rating system, right, really makes employers reluctant to open the system up to being more accessible to people who we might say are quitting, but really are forced by life situations to leave work. So like how you're thinking about that and looking at that.
Yeah, thank you. Those are huge and really important issues. And I guess I'll answer with a couple of things. I think, first of all, one thing among many reasons we're excited about this task force is that it interacts with other work we're doing that I think is so relevant, right? So we've got a task force also started on older workers and retirement security. We also have a workforce on COVID and the impacts of COVID on various aspects of social insurance. And then we've got this broader economic security campaign. And in keeping with that, our caregiving work. So we see all of these aspects of the Academy's work, all these initiatives as informing one another. And we're very hopeful. We feel this is a moment to be ambitious and to see not only how do we sort of, not so much how do we kind of fix holes that have opened in various programs, but also how do these programs interact with each other and how are they not interacting properly with each other? I'm trying to see the social insurance system as an ecosystem. So I guess that's one piece I would say. The other piece really speaks to, we're not only seeing the labor force shift, but as I was trying to say earlier, we're seeing the definition of employment and how people are employed, change. And I think that speaks a lot to what you're talking about. This again, as we know, was built at a time when the assumption was we had a male breadwinner in a male female household with 2.37 children, who are going to have long spells of employment, followed by relatively short spells of joblessness, followed by another long spell of employment. And none of that is pretty much true anymore for most people. And so part of what we're looking at as we assess this is, what does life actually look like? What does employment look like for people? What does joblessness look like for people? What does family structure look like for people? What do other life responsibilities look like for people? And when we say shaping a UI system or building back better UI system that works, it has to take into account all of those realities. So we've got folks who have expertise, for example, on caregiving, informing what's going on here. We've got folks who are thinking about our older workers task force, looking a lot at the reality that jobless spells are often very long. And kind of going back to one of the things you were saying at the beginning that I think we've really lost sight of in the UI system is it is also supposed to be about helping people maintain an attachment to the labor force. And we've kind of lost sight of that one as well. We're not doing a good job there. We don't have resources or expertise to do that. I know Rob has some stuff to say here.
I know, I just want to mention that there is a program that has tried to do this, but has failed. There's a program in the US we've tried to encourage called the Work Share Program. And it's modeled after several other countries that pay benefits to people who are still working, who have just had a reduced amount of hours. And their employer can reduce the schedule and hours, and they would still be eligible for a portion of their UI benefit, which has been very successful in several other countries, but has just been terribly used in this country. And has been tried to be pushed during this recession. The federal Congress put a lot of money towards trying to encourage states to use this program, where employers would just reduce the hours rather than laying people off. But I think that what you mentioned in terms of the cost to employers is so large, and in terms of the tax and the experience rating, and the fact that the US has so many people that are lower wage, and the cost of training in this country are so low, that are reasons why this program has never really taken off. Although there's been a great deal of emphasis on trying to get it going, I think they would have to offer a much higher level of benefits and incentives to employers to get it going. And so it's not that we haven't tried.
I guess I would add one more thing, and I'm not saying this only because of the poster that is framed right behind your head, Tina. I would have actually said it anyway, but I feel like this also illustrates how much this issue and many other issues we've discussed today interact with the issue of unions and the dismantling of unions in this country over the past many decades. It's not a coincidence that we can look at a direct correlation between union strength and UI accessibility, and the opposite in states. And so one of the things that we're also talking about and very cognizant of is that issue and kind of how it interacts with UI. And for that matter, I work on workers' comp. It has a very strong impact on workers' comp with it, which if anything is sort of like UI on steroids, because there's no federal floor whatsoever. There's no federal guidelines. There's no federal monitoring. So I really look at what we might kind of do better in UI as a way to think about how we might do things better in workers' comp, which is facing, as I said, many of the same issues, only more so. I'm supposed to close this panel down. I do want to thank everybody so much, especially again, thank Rob so much for incredible work, for providing information and data that we would never have otherwise. We are so lucky to have him as a member, to have him on our study panel, to have him here at the workshop today. Thank you all so much for coming to the conference, for joining us. You are going to get a follow-up email because yes, we are stalking all of you, that will ask you what you thought of today, including this workshop. I hope personally you'll say nice things about the workshop, but more importantly, please do tell us at the Academy what worked for you, what isn't working, what else you'd like to see us doing. We really want your input and your guidance as we launch this economic security campaign, and we want to work with all of you. So let us know how we can do that. And we look forward to seeing you again tomorrow at 11. Thanks so much. Have a wonderful afternoon.
Oh,
You.
John. Howdy. So we've never met before. My name's Catherine. I'm a labor economist at the RAND Corporation.
Hi, Catherine. How are you?
Very well.
I've got a master's in economics, so fire away.
Yeah. So in terms of asymptotic theory, no. So I got
Not that far.
really. So the COBOL comment you made, and I would love to hear if other people have been told this as well. I made some comment about how UI uses COBOL, and someone like shot back at me that probably my bank does too, and that most of the financial infrastructure or most of the programming infrastructure for the financial system is in COBOL still. It's just that they actually pay to have someone know the language, and they built their architecture so that they don't replace COBOL, because I guess it's like actually just like a really ornery language, but that it's like it functions, and then they've built all the modernization around it. And so the I kind of said this in passing, and someone said basically like, you don't know what you're talking about. That's not what COBOL's not the problem. And I would just, that's probably like, it's an interest. It's like kind of like the COBOL Cowboys. I don't know if you saw that story. That was like very compelling and charming. And being from Texas, I appreciated that's where they all were. But that was the kind of the feedback I got, was that if I use COBOL to say that it's old, then I don't know what I'm talking about. And I was very, obviously the person was a lot less nice than I was in explaining it,
I stand corrected because I obviously don't know what I'm talking about either. But one does get the impression from the computer system that they were using COBOL and probably still are. But then at the end of 1999, they didn't have enough digits in most of their things, and they had to fix it, and everybody's computer systems got upgraded, and it's a series of patches. And today, trying to make some changes to a PowerPoint and seeing that I couldn't make changes and track changes in it, it's like, why is that? Well, it's because they haven't upgraded PowerPoint for a decade. It's because you build, and Microsoft's that way too. You build on a program and you just sort of update and fix it, but you don't rethink it, which is what's happening with UI as well.
Yeah, no, I mean, they maintained no ability. I mean, they didn't care about maintaining their programs the way that the bank actually cared about maintaining like their financial accounting like systems. But it was just, it's like testimony to how little states cared about these programs that they.
Right, and I'm not saying we should create a new software for all of this, but although again, the feds could spend the money to create a better software and pay states to adopt it. And
so, I mean, my question was, does anyone know what Social Security uses?
I mean, I worked at the IRS for a year, and they were constantly spending money to upgrade their computer systems, but we're still decades behind.
I had another question for the group that I mean, obviously I was going to hijack this entire session, so I'm glad that I was able to do that. But the other question I had for the group was, if anything is on the table for UI reform, I feel like we ought to change the reasons for unemployment insurance. It shouldn't just be involuntary. Like it feels like you should be able to quit and go get UI, and maybe you have some type of like lifetime limit, or if you do go too frequently, you'll get less in benefits. But it seems like the adjudication on the involuntary side leads to some really arbitrary decision making, and it's also not indicative of the risk that workers face anymore. It's not just involuntary layoff that's your risk in the labor market.
This is all about redistribution between workers and vacationers, and Germans versus the Greeks, right? The Germans work all the time and don't take their vacation, and they don't want to bail out the Greeks when the Greeks are taking lots of vacation and dancing around their country. And that's what you run into. In other words, I'm kind of a workaholic. You probably are too, and I don't mind paying taxes for reasonable things, but I understand when people say, I don't want to pay taxes, so that guy can take off for 3 months every winter and go skiing.
So my thought on this was that if you,
I'm not saying, excuse me, I'm not saying you're wrong about, we should make it easier to get benefits when you're legitimately entitled, but it's not just a program of like, it's not like just a sabbatical program. If you want one of those, come to a university and.
well, I guess my thought was that one of the ways to have buy-in to the program from higher earners was if you would, I mean, at the moment, people who have involuntary job loss tend to be really concentrated at the bottom of the wage distribution. And so if you wanted to get buy-in for higher wage earners, you would change the allowances for the program for things that would be more reasonable for them. So I could imagine a program where, like, if you quit to go back to school and get like a master's degree, you can get like a one-time unemployment payoff of like, here's $1,000, you're going to school, but you paid into this program, and that's why you lost your job, is because you're starting school. Like, I could imagine lots of scenarios where you start building in allowances that are smaller but appeal to higher income earners through the program, so that they have more contact with the system and more buy-in because they get something from it too.
Well, the financing issue is really difficult for
let me
any
just-
time you start to talk about voluntary. There have been a couple of experiences from other countries. Chile decided to do something similar, where they combined their Social Security program with their unemployment insurance program and allowed people to use their Social Security, their one pool of money when they were unemployed. And the problem is that in unemployment insurance, you have just like many insurance programs, you have about 20% of the people who use about 80% of the benefits. And you have a lot of people who are repeaters in unemployment insurance. You have a good deal of people and employers who are using the system, laying off a lot more than they're paying for. And so the financing of any program, and in Chile, they had to go away from the program because so many people were exhausting their retirement, their pool of money that they had developed. And so, yes, if you can figure out a good financing, I think that it involves some type of reinsurance backing of that program, then I think that's the way you could develop that.
I just realized Tom's hand is up.
Yeah. I don't have anything on that question, but going back to the cobalt issue, California still uses that. And from time to time, they have hired Deloitte Touche or whoever to upgrade it or to replace it. And it's cost so much that they don't do it, or they do half-assed upgrades. I'm also on a board of the State Compensation Insurance Fund here, and we've had experience with the whole technology stuff, and it's been a nightmare. But finally, we hired someone and replaced the system with a better system. And it took years to actually transfer everything over to the new system. But it's really worked. And it's something that people who have knowledge about technology and about all the contractors who get involved and make money off of it and then try to make the states dependent upon them, someone should really look into that, because it's a big issue. And I think it really speaks for total federalization, because they could basically start with a fresh system.
Well, California is actually one of the better ones. They actually are running their program much better than some other states. And I think there are some good examples.
The experience we've had, it's pretty horrible with.
Yeah, I would say
unbelievable.
That there are worse states.
Unbelievable.
But you might want to look at some states that are doing well. There are some examples of states that are actually staying on top of it. They actually, Oregon, Washington, they actually are paying a high proportion of their unemployed. They have adequate, reasonable computer systems running, and they're able to finance their programs. So there are examples of states that are doing much better job. And it's unfortunate, but California isn't the worst.
Well, Washington's amazing. They lowered the employers' contribution rates and they gave a benefit increase at the same time. just recently in legislation they passed. So it'd be
Yeah.
great if, but they're well funded. Their maximum, their tax base minimum, maximum taxable wages are 50-some thousand dollars.
Yes.
They
Oregon's
went
even
up,
better though than Washington.
they're indexed, and they went up almost as much in 1 year, 6,000 some dollars, as California's base is 7,000.
Yeah. What's the problem in California? You're just politically paralyzed?
Well, I think one of the issues, and I'm not positive on it, if it's true, they think they have to have a 2/3 vote of the legislature to increase the tax. And I can't quite believe that, because I think we've increased state disability insurance taxes, which are totally paid by the workers, without a 2/3 vote. But anyway, that's the excuse that's used for not doing anything.
Oh.
Proposition 13.
Well, no, it wasn't. It was some other thing, but I'm trying to get the Labor Federation to really get a legislative council's opinion to get it validated. I mean, we should know really if it's going to take 2/3, but we have 2/3 majority in both houses now. So it's no one wants to deal with UI. It's just, I don't know why. But maybe this pandemic will force something to be done. But what's happening is all they're dealing with is technology issues and not with benefit and funding issues.
Caroline, or Catherine, back to your point, I just did want to say that we have to look at the demographics, and among low-income households, it's a lot of single family, single individuals and working moms, and they're never going to be able to take off. But you get to the upper quintile, the top quintile, and they're almost all married. 80-90% are married. Their kids are going to go to college. Their spouses, somebody might stay home with the child. And they would, of course, not mind getting unemployment compensation for doing so, but that's not going to be an option for that low-income mom. She's going to have to work. And the high-income mom or dad is going to stay home and get government funds or get redistributed funds.
Well, I do think that
I'm big on asking who's paying and who's getting. And normally I would say, let's have a big wealth tax on rich people and give a lot of money to poor people. And that's it. But we don't have that. We have an income tax. We have a payroll tax.
So, I mean, I guess I thought about the kind of, how do you make UI effective when essentially it's like the one insurance mechanism for a really diverse set of risk that people face in the labor market. And so, I mean, I think kind of one of the natural thoughts is, well, you need to split off family leave, because that's too hard to do in the same program. So you need to split off family leave into its own, so like national social insurance program, or mandate states do it. I mean, national would be better, but then the risk in the labor market for a lot of people is kind of an inability to move. Like, some people have the risk of layoff, but other people have the risk of kind of like a dead end job because they don't have the means to move themselves up. And so one of my compatriots at the Rand Corporation, Jeff Wenger, is also a UI expert. And so Jeff and I were, just jamming one day over lunch, as you do, about how you would improve UI. And the kind of solution that we came to was, you would need to have a program that basically had like a catch and release, so that like you go to it, but the more you go, the more it siphons you off into training and counseling sessions. So like the first time you go to UI, you just get your benefit, but then it's going to reduce your further UI unless you then go in for services and training. And so you end up using UI's insurance pool as a way to reduce the risk amongst high use workers by sending them into some other type of intervention, because otherwise they'll just have a kind of a constant risk exposure that doesn't turn over. And then you'll have like the non-risk people that you need to give some kind of token award to kind of get them to continue to have buy-in in the program, which would be something like, if you quit a job, you get like a one-time payout and it resets after you use it. So some kind of like, oh, I go to school, I get $1,000, and if I work for 5 more years, I could do it again. But like something that would like take into account usage of the program, but wouldn't completely deter use, but then would also be able to catch people into service provision and like high intense training and counseling to reduce the overall labor market risk. which you can't really do in an unemployment spell. So that was kind of the thought that we had when we were jamming about it. But then I was like, it's just you and I mean, like, we both think this is brilliant. So I had to have to kick it off to other people.
What would you do for people who are just seasonal workers or want to use the program and not, because the program actually, a lot of people don't realize is a majority of people only use it for a much shorter period than the duration. Maximum or average duration in UI, besides the pandemic, is only about 14 weeks. And so it's a temporary replacement of wages, and they're not really, I think what you're talking about perhaps might be addressed through a different program or separating them out.
Right, or a different risk kind of profile that takes into account, a short spell versus a long spell, right? That like, I mean, I don't think it would be so hard to identify that if you lose your job at a factory at 55 because it left town, like, you are not going to be unemployed for 14 weeks. Whereas if you're 25 and you're flipping burgers and they like close down the McDonald's for construction, like, probably you could get a job relatively quickly. But like, we have all kinds of predictors of length of unemployment, and yet we just identify this like one insurance benefit that's just part of them. And so, I mean, kind of the other direction we were thinking is that if you get older people who lose their job, they basically just wait until they can get SSDI. And there could be a long, like a unemployment insurance program that's basically stepwise, where once you've been on it long enough, like, now you're kicked off into the other long-term unemployment program. And that has a whole other set of rules and conditions and services. But like,
wow, I think that I'm surprised that I know Jeff well, and I'm surprised he didn't bring up what we have as the profiling program in the US. We're the only country in the world that tries to identify the probability that someone's going to exhaust benefits. And we tried to identify factors in that person's job that would mean they're going to exhaust and be long-term unemployed, and provide them with services. And it didn't work so well, but still, we're still doing it.
Yeah, no. So he 100% was like, yeah, profiling is not really a thing that you associate with like good things, especially for Black people.
That's true.
But even, I mean, it was the 80, whichever one was the NCUC. I mean, they said you needed different benefits by age of worker. I mean, and they said that in 1980, they said that people who lose their job after 50 just aren't the same as people who lose their job at 25 or 30.
Well, they seem to recognize that stuff in Belgium and Netherlands. I mean, where if you're like 57, then, and you get laid off or lose your job, you take unemployment for a year, then you move into the Social Security system.
Yeah, I mean, I guess it's just there's so much room for maneuvering that we just don't take advantage of because we don't have any maneuvering, really.
Well, the program hasn't been significantly changed since 1935, I think.
Yeah, it's actually worse, I think, on the tax side than the benefit side.
Yeah.
And states are still using what we call experience rating methodologies that were developed when the program was created. And there's actually 35 states. I don't know, is Tom still on? But California is one of the worst. They still have what's called a reserve ratio methodology to assign tax rates. And it's much more archaic than the benefit payment system. And I think is badly in need of reform. Probably one of the elements of UI that is probably the most archaic.
Yeah, I'm writing a couple of blog posts for RAND, which I've been doing throughout the pandemic to try and like do basic I find I'm writing them mainly for journalists of like, they're like, we didn't reform unemployment insurance in 1980. I'm like, no, child, we didn't. But this is, I kind of am writing those type of blog posts. And so I'm working on one, actually, it's so funny, it's on my other screen about experience rating and how this is like, it's almost like you have to make awful metaphors, but I'm kind of like, it's that thing in the Death Star. It's like
That's a good one. I like that analogy.
it's like, why would you build in that fundamental weakness into this? Like, it's just this one thing. But I'm trying to say, like, this is the hole in the Death Star, that they hit it every time. That, you know, you'll never have a program be successful as long as experience rating of businesses are a part of it. But
Yeah.
Well, if you
John,
think of it- if
John,
you
are
think
you
of
in
it as an-
Oklahoma?
They
Which
played
state?
with it some, yeah.
What state are you in?
If you think of it as insurance on employers rather than support for laid off workers, you're going to come to those kinds of solutions of experience rating, right? Construction companies in Michigan, where I went to law school, you know, basically they shut down in the winter, and those guys all got unemployment benefits and went down to Florida and, you know, hung out and fished. And then they'd come back and go get their jobs back. And the unions loved it because essentially the federal government was subsidizing the income, and the companies loved it because the federal government was subsidizing the income of Michigan workers who weren't working in the winter. It's crazy though. And why should other taxpayers be supporting that? But
So
experience rating at least puts some of the onus back on the companies that have that as their policy.
So I mean, I don't know how many companies are still like that. I mean, it does
Yeah,
seem
I'm
like
sure.
we have I mean, I know that the film industry, Head Start, those are the ones that I'm aware of. But the other part of it too is that the work sharing doesn't seem to have any traction, but that for whatever reason, we decided to open up the Paycheck Protection Program of like this free for all. But I take it as a lesson that there's clearly demand for employer assistance during recessions that they don't have. And so the other idea I had was that you should just convert states' UI programs into employer programs, and just like, they keep the money, they keep the tax rates, like you can just keep doing whatever you're doing for employers, but that they basically set up a permanent version of the PPP through the trust fund, employer finance trust funds that they already have. And then you just kick out all the workers and enroll them in some new federal program, so that the architecture that states have built up basically tries to force some type of work share on them.
What they did in Europe seems more like they paid money to companies to keep workers on the payroll, whereas we basically threw $600 a week at unemployed people who were laid off, and we gave the companies money for other things, but
Yeah, I mean, it's too easy to lay off people in this country compared to Europe, and the training costs are much less. And so employers, they have no interest in keeping valuable employees when they can easily hire someone else. And so I think for work share to work, they would have to like double or triple the level of benefits and incentives for employers in order to get them to sign up for that program.
Do you think it makes sense to have any aspect of the program run off of the state level?
Oh yeah, no, I think work sharing is important. They just don't value what it means to keep employees in the same job, and so we'd have to pay a lot more to employers in tax incentives in order to keep them without laying people off. And it's just so little, it just doesn't matter to employers right now. But yeah, I think it's worth it.
I sat next to, so I wrote my dissertation on unemployment insurance, and while I was writing it, I sat next to someone on a plane. Fun fact, I'm terrified of flying. I don't know why you have to know all this, but I always end up talking to the person I'm sitting next to like try and distract myself from the plane ride. So it turns out he is an employer, and he owns a company that has workers in Canada and the US. And he says like, oh yeah, we always lay off our American employees. Like we never fire our Canadian employees. Like we wanted to, we would go get work share. And so he was explaining to me that like, oh yeah, he employs across kind of like the northern states, and that like it's clearly a border effect. He'd fire all of his American employees before he would, and they would keep the Canadian ones, and that this was just so much easier. And I was like, of course, in grad school, and I'm like, wow, that's such a good paper relative to my horrible dissertation. Why would you tell me this on a plane ride like the year that I'm finishing? Like you should have told me this on a plane like 3 years ago, and then I would have found some cool employer data, but I didn't. But it was amazing to me that he was an American employer, and he was like, oh yeah, it's so dumb. I definitely lay off Americans. I feel bad about it, but not that bad. I was like,
yeah, it's just too easy.
too easy.
But
Well,
I've seen what you've written otherwise, and it's excellent. And so you've certainly captured what's going on in the US with your other writings, and better than anyone else I've read about the subject. So I think that you have got a hold of what's going on in the US.
On the unemployment insurance side?
Yes.
Oh man, that means so much for me to say that, because I'm sitting here in my closet. Like wall's right here.
Oh, my.
I'm in a little closet, and I'm just like sitting here like writing down everything I know about unemployment insurance, convincing Rand to put it on a blog post, and like hoping it makes some kind of difference. So it means so much that you've read it.
Yes, of course, it's wonderful. And there's just very few people writing about the history and how we developed into what we have today. And it makes all the sense in the world to look back and see, how did we come to this point? And you did that wonderfully in a very succinct way.
I'm so glad to hear it. The big win was that I got an email from like 3 weeks ago from an editor from the Washington Post that just said, "We think you should write an op-ed on unemployment insurance." And I was like,
wow.
Yeah, I tried to play it cool. And then it went, and it was on the Sunday print edition. They ran it, and I figured out who are the people I know who get the Sunday print of the Washington Post, because they all
Oh my
emailed
God, I spent my entire career trying to get an op-ed published in the Washington Post, and you're like a child.
It was a true. So what turns out that they emailed another economist who's much more established than I am. Her name's Hillary Hoynes, and she's at Berkeley. And they emailed her and asked her if she would write it. And apparently she wrote them back and was like, "I don't know as much. You should ask my friend Catherine." And then they emailed me on her suggestion. So when I got it published, I wrote to her and I was like, "Hillary, this is huge." And she was like, "You did great." It's really sweet. But yeah, but okay. So Rob, I'm going to have 2 more come out in the next couple of weeks. So
really wonderful. Oh, I look forward to that.
Well, you
boy.
kind of scooped me, because the one that I'm working on right now, so there's one on experience rating and how the tax system, is the total demise. Like I can't say any policy at Rand. I can only I can be persuasive, but not conclusive. But the other one is how is called, states are going to learn the wrong lesson. That, unemployed people are going to think like they're going to reform their system. They're going to change the administration. Like, people went through so much this recession that like states are going to learn this lesson. And I'm going to say, no, what they're going to learn is that the people who aren't in hock right now are states that drastically cut their program.
Yes.
And that they're not going to follow Washington and Oregon and Massachusetts to really well-funded benefits that are generous. They're going to follow North Carolina and South Carolina and Florida, because they don't want to have to owe any money. And they're going to go the exact opposite way, because that's what they did after the last recession. And that left to their own devices, this will just, the next recession will be even worse.
Yes.
Yeah. So when you put up your slides with like the 10 ones, I was like, geez, Rob, you're still
Well, good luck with that. That's a very tough subject. I've spoken to a number of reporters, and they never end up writing anything, because I think it just is too hard for them to get into it. And so really happy to see you doing that. And an experience rating, that's just a really tough nut. I do have an article on it, though, on how they should be, how the methods should be modified. So you might want to, if you get a chance to look at that.
Is that in the MLR? Was that your article in the MLR? Or was it another one?
It's in another one. It's called Alternative Methods of Experience Rating. It's in the Journal of Public Budgeting and Forecast, Public Budgeting. I've forgotten the journal name now. But it's available for everybody to see. So I think it might be helpful if you're going to do something on experience rating. Joan,
no, thank you for sharing.
Is it there? Did you find it?
Yeah, you with Michael Miller.
Yes. That one has some interesting history too, I think you might find.
The history part is just so fascinating. And I think it's the part that journalists just end up like drooling over, because they're like, wait, what do you mean?
Yeah.
I'm really lucky to be at a place like Rand that has an infrastructure for dissemination that, they have a very large microphone, and they let me speak in it, which is
Oh, that's wonderful.
yeah.
That's great. That's a rare
So-
place.
So Rob, it kind of worked out in the National Academy world that I'm a PI on another study panel that this conference is based on, which is the Economic Security Study Panel. And so when they were making the UI task force, I told Bill Arno, and I was like, this is preposterous. I need to be on that task force. But of course, I haven't finished the paper that I was supposed to finish 2 months ago on this study panel. And so he was like, no.
Oh.
You're not going to be in the UI task
Wow.
force until you finish the one that you were supposed to finish. However, should y'all need any help or anything,
Wow, sure. You're valuable. I can see why you'd be so busy. Good luck with that.
yeah, well, I would not have taken on PI of an economic security study panel report in October of 2019 had I known what was coming, because I was already playing catch up. I had my first kid in December.
Oh,
So
wonderful.
I was on maternity leave, and I was coming back from maternity leave, and I was like, all right, it's time to kick it into high gear. And I came back for like a week, and then we all went home again, and I haven't gone back since. And so the being at home and childcare issues and
Wow.
all of that made it harder to finish the study panel on time. So
I bet. It's amazing. You have all that going on. Good luck.
yeah.
Wow. If you
Well,
were
you guys-
talking about reforming experience rating, John, are you in Oklahoma?
Yes.
Yeah, that's the
I know
worst
we
state
reformed-
for tax systems in the
we
US.
reformed it somehow or another. Was it that or workers' comp that we reformed in a way to save money? Save employers money.
Oklahoma has a methodology that was developed before automation. And instead of looking at the benefits that employees receive to assign tax rates, they actually look at the wages of employees because they didn't have any method of tracking benefits. And so they still maintain that methodology of looking at wages of past employees and assign them back to employers because they haven't caught up yet to using having the ability to track benefits back to employers. And it's so Oklahoma and Delaware are the two states that are the most backward that haven't really joined us in terms of finding automation, using automation for assigning tax rates to employers. And they're the only state that still has I don't think the state can borrow money.
No, and that's a good thing, Frank. That's generally a good thing. Although the pension plans can. But there's nothing wrong with having a balanced budget.
Yeah, but they have in their law that if the UI trust fund goes down to zero, they're going to just jack up tax rates so high to prevent it.
Well, I don't think on your charts, benefits did look pretty good, so can't complain.
Yeah, Oklahoma's not so bad. They're not one of the benefit cutters.
Right, thankfully. They haven't figured it out yet. They haven't. Usually we're in the bottom 5 with Mississippi and Alabama on most everything, but somehow we're not.
Well, you'll have to explain to me one day, Rob, how Texas has higher benefits. They must be on an automatic increase because when I'm from East Texas, and so it's always the place where I go first. I'm like, all right, well, let's see, what's the messed up thing to do? Why don't we head on home to Texas, see what Texas does. And I was like, oh, their benefits are actually pretty high. I think they're higher than California's. And I was like, how'd that happen?
They're fascinating actually, because they have this dual mentality, where they hate the federal government. They're one of the states that will not borrow. Well, they borrow and then they privatize, they bond. They go to the private debt market and they borrow money from the private debt market just because, and they're willing to pay more back to private bondholders than they are willing to pay back the federal government because they don't want to deal with the federal government. So, and they cannot get a tax increase. And so they fool employers by saying, okay, we're actually saving money by doing this privatized bonding and we're going to have a bond tax on all the employers, which they do. But because they can't go to the legislature and say, okay, let's raise taxes. So they get all this money from private bonding. And they're going to do it again, I'm sure, very soon. They're going to go to the private bond market and get rid of their debt instead of going to the legislature and reforming their UI system.
I think,
And
does anyone else do that besides Texas?
Texas does it better and more than any other state, but Michigan learned the lesson really well and they copied. And now Michigan has a positive trust fund. They've always been the highest borrowers of any state, and they've led the country in borrowing money because they have such high costs. But this time they're not, and it's because they bonded and they raised all this money from private bonding, and they also cut benefits. Michigan did. And so last recession, there were 8 states that followed Texas. And I think there'll be more.
Isn't the problem here that we don't have true federalism because they haven't done anything with the program since 1935? But things like Medicaid, you know, while the feds haven't got universal health care, and the Supreme Court said they couldn't expand Medicaid, but basically the feds say, you know, we'll give you this money, but you've got to do this. We'll give you this money, but you've got to do that. And it doesn't, you know, you have some kind of matching funds in some fashion, and then you can get the states to move in a better direction. I'm not averse to the laboratories of democracy trying to find better solutions, but you build on them when you decide that's a good solution. Now let's sort of make all the states do it.
Exactly. I think that puts it in a nutshell. I think, but they never implemented any minimums in unemployment insurance.
That's incredible.
So we've had these experiments, but we don't have a minimum. And so that's why we're cutting, and there's no impact. There's no federal standards that they have to meet in order to meet the federal requirements.
Right, and I guess Elaine's an expert on workers' comp as well, and that's totally state. So it's really screwed up.
It is. You can
Worse,
actually have the choice in most states of whether to just not have workers' comp and have private workers' comp, or use the public system. And well, I'm not familiar. I mean, workers' comp tax and what you pay is much higher than UI. And so I think there must be some greater concern about the financing issues in workers' comp then, because there's really been, because the tax is so low, I've just seen the interest in UI just deteriorate over the years. I think workers' comp is about 2 or 3 times the size on average of the UI tax. And so there's a much bigger lobby group fighting anything in workers' comp than there is in UI.
Right, and the lawyers make a lot of money off it.
Yeah, and there's a lot more students studying workers' comp than UI. I don't know what happened to the interest in the academic world, but it's just died. There's no more. There's only you and a few others doing UI work.
You know, I mean, I went on the market 4 years ago, so I was up in 16, and my paper said that families were giving money to unemployed people because they weren't getting UI. And I tried to use as like an identifying mechanism that the unemployment programs were the benefits were so low and the taxes were so low that there was like, for a lot of ways, like no program for young workers. And so you ended up having families give money. And I had the hardest time convincing people that unemployment insurance benefits basically didn't matter. And they just never got, like, I couldn't convince them that this was something that they had to do. And that unemployment insurance was a terrible program that didn't help people. And they were like, no, unemployment insurance is good. I'm like, no, it's really bad. And it was like this real struggle to try to explain this. And eventually I got a job at Rand, and I finally got the paper published, but like after much duress and heartache of just people telling me that I didn't understand unemployment insurance because they just never updated their thinking on it.
I think we lost Robert.
I think we did too. Anyway, I have to run, but it was really nice to talk to you and nice to meet you.
You too. Find me. I'll be easier to find than you. So send me a paper.
Yeah. Thank you. Bye.
Yeah, John Foreman at University of Oklahoma. Bye.